Welcome back to the Dirt Life podcast. I wanted to have you on to do something a little bit different for equipment operators just because I think they need a little bit of help. So explain what you do a little bit.
Yeah, absolutely. Thanks for having me, by the way. I've been seeing it all over social media and really enjoy it so far. And so a bit about my background. I originally actually come from a trades background. I don't know if I've never mentioned
No, you
that
didn't.
before.
Like what?
So growing up, my father runs an ironworking company. So I did that when I was a kid every summer with him. The only kind of operating that I got to do was like a zoom boom and a man lift.
That's all right.
Right, which was fun. And then I realized that I was not built to work outside in minus 35, minus 40. So I went and became an electrician instead. Right out of high school, became an electrician. Did that here in Calgary for a few different years. And I really enjoyed it. Like, I love working with my hands and actually getting to be on the tools. But I had a good friend, he reached out and he's like, Colton, you should interview your future and look at someone who's doing your job, but they've done it for 30 years. And I did, and unfortunately what I saw a lot of was the guys I was working with, they were complaining about work or their wife or their money or their bodies, and it scared me, to be honest. So I ended up looking for something else. Never in my life did I think I was going to go from working in trades to putting on some dress clothes and talking about numbers every day. It wasn't it's not my strong suit. But I got started with a company part-time, got licensed in the industry, started to build some clientele, build my knowledge, and that was a little over 8 years ago now. And so I've been working with World Financial Group for just over 8 years. I'm a senior partner running a brokerage all across Canada. We have about 25 licensed advisors that work with me now, a few that are down in the US as well, in Utah and Arizona, Colorado soon as well. And we're growing, and we like to help teach people about money, work on financial education, financial literacy, which is an epidemic in Canada right now. So we just want to teach people the basics, show them what's out there and available to actually help them get to where they want to go. I don't know about you, but I was not taught anything about money growing up.
I wasn't taught very much. A little bit, like how to make a basic budget and stuff. I mean, I never followed it anyway.
Right.
But.
And it's crazy because obviously we're different generations, but even coming through school, we didn't learn anything about money, not budgeting, not nothing. And then most kids, we get out of school, and if we go to university, we're given $60,000, $80,000, $100,000 of debt to go to school, or you're given a $5,000, $10,000, $15,000 credit card, and people get in trouble really quick. So it's been a cool experience getting to work with. I have clients that are in their mid 70s. I have clients that are 18, 19 years old, just getting started, and been able to help a lot of people in the last 8 years. It's been fun.
So some things that I see in construction, it's like most operators, for example, don't seem to be very good with their money. It's a challenge because it's weather dependent.
Mm-hmm.
So, I mean, I make a lot of money right now. So, like, the more you make, the more you spend. Right. The typical thing. So there becomes a problem when they don't have as much work as they did, and they don't have as much money now because they spent a lot of it, right? So there's that, plus going from not making much money outside of construction and then making a bunch within construction. A lot of people buying boats and trucks and all this stuff, and then here comes COVID or recession or like something, right? So what do you recommend? Like, what's the basics here?
Absolutely. That's a really good question. And without sounding like a buzzkill, there are some basic foundation, like some building blocks that you got to set in place before allowing all that stuff to come in. Because it is like, and that's what I understand and really respect too about operators, is you guys work really freaking hard. Mm-hmm. So you want to be able to enjoy the fruits of your labor, right? Especially if you're doing shift work and you're away for a long time too. There's 6 basics. So what we do, we help people find what's called a financial independence number. It's the amount of money that they need saved when they hit retirement to live the life that they want through retirement. So what age do you want to retire? How much money do you want to live on? All these sorts of questions. And then there's 6 basic aspects that we help with to start moving people in that direction. So first one is obviously cash flow. For a lot of people, that's a big one. Like you're saying, with operators, they can make a lot and then make nothing, or it can just get slow, or maybe they're making a lot all the time and they just don't know the best ways to put it away.
Or invest in things.
Yeah, invest in it and get it working for you so that you're not always just working super hard for your money, but getting your money working hard for you as well. And taxes suck. So if we can get reduce a little bit of that would be good. So cash flow is the big one, right? Making sure you have stable income coming in to a degree. The second one is debt management. So how do we put a cap on our debt? How do we start to reduce our debts or even eliminate it if possible? That's not always an option, but for some people you can eliminate debt. So whether it's talking about, like a snowball effect where you either decide to fight the highest interest debt and get it paid off sooner, or you pick the one that has the lowest balance and get it paid off sooner, just depending on the individual. Sometimes, even if it's a lower interest but you have less on it, it's mentally for them to see one get cleared off of their spreadsheet is like, okay, awesome, that one's gone. So you want to get debt paid down. Try not to let it get out of hand to begin with. The third thing that we focus on from there is emergency fund. So getting some money tucked away for that rainy day that comes up, because it always does. Standard in the industry is like 3 to 6 months of your expenses saved in case something were to happen. It's not always super easy to get to that point, and that's where a lot of questions come up like, hey, do I save money or do I pay down debt? And I try to tell people you have to do both. You're not going to do either as fast as you'd like to, but if I've got a bunch of debt and I've got no savings, and I start paying my debt down, when an emergency comes up, because it always will,
You'll just gain more debt.
yeah, go right back to it. So if I can even say I put 60 or 70% of my money that I have to put away goes to paying down debt, and then 30 or 40% goes to building some savings, then as that emergency comes, I drain my savings and I can still keep my debt going the direction I want. So making sure we have a proper emergency fund is important. Part of that is making sure you're setting up like automatic transactions that come off your like set it up for the same day you get paid, make it go into a separate account, out of sight, out of mind, and it's there, right? Even if you have to open it up at a different bank and just have a checking account at a different bank, and it automatically transfers money to that account, and you just don't think about it. And then after that, we're talking about proper protection, so proper insurances, whether it's, I'm not sure, are a lot of operators usually self-employed, contracted, or is it a lot of employees?
It depends. Some are union, some are self-employed, contractors,
Right.
And most though are just employees.
Right. Okay. So the three major insurances that we work with as at least is so life insurance is pretty standard. It's obviously a very important one. Critical illness insurance, which is something that's not talked about enough in Canada, especially considering the statistics in Canada. So critical illness, what it does is it covers like the 25 biggest conditions: heart attack, stroke, cancer, going blind, that kind of stuff. And I think cancer alone in Canada is almost 1 in 2. Like it's over 40%. So having some kind of insurance there where if you get sick, you get a lump sum payment tax-free, usually 1 to 2 times your salary, just for doing whatever you need to do to live. And then there's disability insurance, which is a big one too, making sure that if we get hurt and we can't work, right? We were talking before, right? Having some toys and stuff like that. Mm-hmm. Well, with toys also comes injuries. And if you get injured and you can't work, unless you're an employee with a good disability plan at work, you're going to get in hot water pretty quick, right? If your income stops.
It's your own fault that you got hurt, essentially. That's why I sold my dirt bike. Well, I sold it because I got hurt at work, and I didn't want to get hurt again after it was healed.
Yeah.
So it was like, I'm getting kind of older. Maybe I should just ditch the dirt bike because, like, if I get hurt, I'm done. Like,
seriously. And as good as, like, I tell everybody too when they say, hey, well, I have insurance through work, I tell them to count it as a good bonus, because typically stuff you can get through work is relatively affordable. It's easy to get. But a lot of the times there's two major issues. Is it doesn't cover us for as much as we actually need to be covered for, especially on the life insurance side a lot of the time. And then the other issue is, for majority of companies, not all, but if you leave that company, whether you decide to quit, they fire you, or you retire, more often than not, that insurance does not come with you. So now you're on your own, you're at a different company or whatever, and you may not be insurable anymore and can't go get any that you need. So having personal insurance, I always think is important. And then on the topic of disability, like most companies will cover you if you get hurt at work, not doing things on your own. So a personal disability policy will cover you 24/7, no matter what you're doing. So that's a big pillar too of a strong financial plan. And then after proper protection, we talk about building wealth. So we're taking care of our debt. We've got some emergency funds built up. We're protected in case we get hurt, get sick, or pass away. And then now we want to talk about actually building some wealth. So getting money tucked away and growing, not losing pace to inflation, not staying stagnant. So areas obviously you can start to look at that. The different accounts in Canada. I'm not sure if this is going to be mainly Canadian or American, but in Canada you want to look at tax-free savings accounts. RRSPs in certain situations. I don't always love RSPs because there's big tax implications. Non-registered accounts, first home savings accounts, which is new as of 2023 that the government of Canada came out with to help people buy their first home, give you a little bit of tax deduction and pull the money out tax-free if it's for a first home. Permanent insurance policies that are set up properly by good advisors to be able to reduce your taxation later in life when you take money out. Those sorts of things. Just making sure money is actually growing and trying to do it as tax efficiently as possible. And then the last one is the transfer of wealth. So when we die, what happens to our money? And most of us work so hard for so long, we don't want to give the majority of our money when we die to either the government in taxes or lawyer fees, accounting fees, probate fees, any of that stuff. So as much as we can reduce that and the legacy we're building for our family, because that's why most people work so hard, is if you have kids, like you want to be able to leave something or do something for them. Right? We were having a conversation before, the lengths that we'll go through for our kids. If you're going to work that hard to build something for your family, you want to make sure when you die, it goes to them and it's not going to go all those other places we just talked about. So that's really the basics of that we talk about, is just starting to understand all those areas and then identifying where we're currently at and what we need to work on.
Is there a ratio that you should follow for like your income versus how much you should spend on a vehicle?
I just had a conversation with a client before the weekend, and she was asking me about a new vehicle. Should I buy new? Should I get one that's used? Should I lease? Should I finance? Should I buy it outright? And personally, I'm not an expert on that. Like I don't know the perfect answer, but I would say you don't want the two biggest. This is what I will say: the two biggest expenses I ever see for individuals is housing and their auto, always. It's either mortgage/rent, and then plus your property tax and stuff like that. And then it's your auto. So whether it's the payments on your auto, the insurance, or the gas, those are going to take up the two largest chunks of your income. So if you're already spending a good chunk on your living, whether it's rent or your mortgage, don't go get a big jacked up payment that you really don't need, if I'm being honest. I don't know the exact ratio, but less is more. Like you don't want to overdo it, because then what it does is all those different areas that we just talked about, if you have to put so much more of your income towards a car payment, it slows down your ability to do all these other things, which are actually going to get you in the direction that you want to go. I'm also, though, not the guy that's going to sit here and say what Dave Ramsey says, where like, hey, you shouldn't have no debt ever whatsoever. I don't think that's realistic in this day and age. Sometimes you have to, like the first brand new car I ever got was when I had my first daughter. I'm like, I want something reliable that's not going to cost me an arm and a leg. And went and got a Mazda hatchback. It's nice. It's a good little car.
I did the same thing kind of. I had kids, and my ex-wife at the time, or my wife at the time, was like, I'm buying you something brand new. Make sure my kids are okay, going daycare and school and all this stuff. I mean, had TVs and stuff to keep them entertained. And, like, I didn't have to spend that much, but I'll never do that again. Mm-hmm. I lost a lot of money on that vehicle. However, money's not everything. It did keep my children safe, and she was never broke down, blah, blah, blah. Sold it, lost some money. That's fine. Never buying new again.
I think A good way to put it is buy what you need, don't buy what you always want. Especially if those other boxes that we already talked about are not checked off or in good situations, don't go buy what you want to get. Buy what you need, which is going to be a reliable vehicle to get you where you need to go, enough space for the kids, or something that's safe to go to and from work if you're traveling like way out to site or something like that. But don't get the big fancy thing that you really want if you haven't checked off those other areas first, or else it's really going to slow you down long term.
However, most people will try to justify it as a need because they really, really, really want it.
Yep.
So they'll even lie to themselves and forget that it's a lie.
It's delayed gratification is a really, really important thing, which is very hard to come by these days. But if you can just hold on a little bit longer, make it do with what you need instead of what you want, you will thank yourself later, for sure.
I've been doing that for years with everything.
Yeah.
Everything that I've done, not one business loan, nothing.
Good for you. That's awesome.
Nothing.
Because most guys will go and get a huge jacked up loan just to get the doors open, and then they're just fighting, not just to stay in business, but to not have to own anything.
Mm-hmm.
That's awesome.
No one owns me. Bank doesn't even own me. Buy everything with cash as I can afford it.
Awesome.
I mean, that's the super long, hard way.
Yep.
But that's how I do everything.
Yeah, and you probably sleep pretty good at night because of that.
Mm-hmm.
Right? Having a huge jacked up truck payment or something like that, when things get tight, and as we were saying, with operating, it's not always super consistent. Sometimes there's big off seasons. Those off seasons are going to be a lot less stressful if you're not worried about 40% of your income that should have been going towards a vehicle payment plus insurance and gas and stuff.
Let's say someone works in construction, they have lots saved up. Their money is in an account that's not making them money. What do you recommend someone that has like $100K in the bank? How can they use that safely to make them money, whether it's even just a little bit?
Yeah, that's a great question. So there's a bunch of different places you can go in and invest money, right? Like I talk like the big four would be like GICs, guaranteed investment certificates, where you put some money in, you lock it in for a certain number of years, usually a 1 to 5 year period, and you're guaranteed a certain percentage. I don't love those because historically they're very, very low, like 1 to 2%. When lending rates go up like they have been the last couple of years, you can get a higher, like a 4 to 5% GIC right now, but they're not amazing unless you're just super, super risk adverse. You can do things like bonds, which are very stable investments because they're put in place by governments, and they're a good, safe investment, but they're also traditionally like 2 to 5%. So they're not shooting the lights out. You can go into the stock market. You can go get a self-directed investment account and go start taking a shot on some things you heard from Uncle Bob or a guy at work, which I always say there's no harm in that as long as it's not your only option. Don't put all of your money into those. And then funds. I personally work with funds, so obviously that's what I would suggest for the average individual is get either a mutual fund or a segregated fund. So whether you go to the bank and say, hey, look, I want to open up, the first thing you have to decide is what account are you going to put the money in. So there's different accounts. There's a RRSP, a Registered Retirement Savings Plan, which is the benefits to it is when you put money in, you get some tax deductions now for this year.
But when you take it out.
But when you take it out, you're getting taxed on every dollar. It's become a twisted thought that people think RSPs are like they think that it's a tax savings account. It's not. It's a tax deferred account. So yes, you'll save a little bit now, right? Because the whole idea behind an RSP, and I don't want to go on too much of a rant, but I don't love them. Mm-hmm. It was a vehicle that was built. It was put together almost 70 years ago. Like it's a very, very old investment account, and it has not been updated that much. So what happens, the idea behind it is you put money in because you're making the most you're ever going to make. You're at the highest tax bracket. You get a deduction on your income this year. So you get to either get some money back or not have to pay as much in taxes. And then as it grows in the account, you don't pay any taxes on that money. But when you go to take it out, whatever you take out is going to be taxed as income the year that you take it out. So the idea is I make a lot now, I'm going to save on taxes, and then later, when I don't need that much to live, I can pull out at a lower tax bracket.
However, maybe in 50 years, taxes went to the roof.
I always ask two questions. I say, look, do you think in 30 years when you're going to retire, taxes are going up or down?
They're
Always going up.
They're going up.
Once they go up, they're not coming back down. And do you think that the cost of living is going to be more or less in 30 years? It's going up. So I don't love that vehicle. I always tell people, I'm like, look, the two times I'm like, okay, it's not bad is if you do have a larger income, like you're getting into, 120, 50, 80, 200 plus, okay, then you can strategically use an RSP. Or if you have a company that matches your contributions, I do say take that because it's free money. You're doubling your money just by putting it in, and then the company matches it. Yes, you're going to pay a lot of taxes,
but
half the size.
That money should essentially pay for your taxes.
Yes, exactly. You're not going to say no to free money, but I do tell guys, I'm like, don't put more than what the company's willing to give you. Then start looking at other vehicles, because then, like the comments about like, hey, our taxes going up or down. How about the fact if I contribute $100,000, but it's grown by $200,000 during my lifetime, I just created $200,000 of taxable income now in retirement. That is either paid when I pull it out or when I die, it's all taxed at once. So, not my favorite account, but one of the options. Then you can look at things like tax-free savings accounts. Phenomenal. I say everyone and their dog should go get a TFSA. If you're 18 or older, you can open one up. The downside to it is your contribution room. You're only allowed to put in so much money based on how old you are. So the year you turn 18, your room starts carrying forward, and the government sets what the number is, what the limit is for that year every year, and then it just keeps adding up, whether you contribute or not. It just keeps adding. And then the other drawback with the TFSA is most of the time when you walk into a bank and you ask for a tax-free savings account, they give you a high interest tax-free savings account that will do 1 or 2% interest, which is nothing. Like, it's not going to do anything for
Unless you have millions in there.
Yeah, literally. There's this thing called the rule of 72. It's a really basic rule just around compound interest, where if you take the rate of return on your investment, you divide it into the number 72, it'll give you the number of years that it'll take for that money to double. So if my investment is earning 1%, it'll double in 72 years, whatever I have today. Exactly. So it's not gonna. I've got a good video on my Instagram page if you guys want to check it out, where I talk about what the banks do with your money when you give it to them, and they go make a whole lot of money and then pay you 1% for having your money in that account.
I have a question.
Yeah.
Is there any things that you can do that aren't designed by the banks or government? Because they clearly restrict you, they hold you back.
Yeah. It's not my wheelhouse, and I can't say too much. And again, too, I will just put a disclaimer. This is not financial advice. I'm not telling you to go do everything I'm saying right now, because I am licensed. So I don't want you to think that I'm telling you to do X, Y, Z. But that's where you kind of get into the conversation around like cryptocurrencies and digital currency and stuff like that, which is something that personally, because I don't work with my clients, it's not something that I've spent a lot of time or put a lot of energy into. However, I do have some good friends that that's where they put all of their money. So it's, again, I think it's probably something that's worth having in a portfolio.
Mm-hmm.
Would I bet the whole house on it? Probably not.
Well, you should never put all your eggs in one basket.
Yeah, exactly. But yeah, there are some options out there. I just would not be the best person to talk to about it because it's not something I'm really familiar with.
Mm-hmm.
I try to, with the stuff that we have been given, I try to use the loopholes or the strategies that I know of, that I've learned about, that I've helped clients do to either reduce taxation or get your money growing faster, or just, the less the government can have to do with your money, the better. Right? Personally, that's why I like another vehicle you can put money into is permanent life insurance policy. I will just say it has to be set up properly. It depending on the advisor and the company that you use, it can be set up incorrectly and end up being a really bad strategy. But properly done, it can be a great option to tax shelter your money, have it grow, and then take it out on a tax-free basis with a couple of strategies, or when you die, have that money pass completely tax-free to your family, which can be a really good benefit. And yeah, so I don't know if that answers your question, but
Yeah, it does.
that's about as much.
Yeah.
I don't have a ton of info on that type of stuff. And then another one, the fourth vehicle that would be available to you, that's again put together by the government, is a non-registered investment account, which basically what non-registered means is the government doesn't care too much about what you do with it. Put money in as much as you want, as little as you want, let it grow, invest it in whatever you want. Just give us our capital gains tax when you make money, which, yeah, there's been some rules that are changing around capital gains tax too, which is again, taxes just keep going up.
What's your thoughts on that?
I don't love it. I think any way that the government tries to spin them taking more of our money is bullshit, in my opinion. They say because it's over 250, it's not affecting as many people, but if you don't have businesses or individuals that want to invest money in projects and things in Canada, like if they are more deterred to do that because of rules like this, we're going to have less options for people in Canada to work with those companies,
Right.
work with those businesses. It's not just, hey, it affects the person that has that much money. There's a much bigger picture to it.
Myself as a business owner, like, it'd be good to have incentive to succeed and build other businesses, to help other people, to give people jobs.
Yeah.
But like, if there's no incentive, I just get taxed more, then what's the point?
I agree. And something that I think people need to pay a lot more attention to, especially here in Canada, is we've been taught that, like, hey, the business owner, the wealthy business owner is the devil these days. And they make you think like your neighbor down the street who drives a nice car or has a big house or whatever is the wealthy business owner, when really they're just doing a little bit above average. It's not the wealthy people that pay zero taxes, do nothing. But if you look at exactly what you just said, incentive for business owners, you have to take a lot of risk and you have to deal with a lot of shit as a business owner to be successful. But if you're in an environment where the government wants you to have to pay your employees more, so it keeps increasing minimum wage, and then also, so it's going to cost you more to run your business, and then also is trying to now reduce your ability to be profitable and prosper by adding more capital gains tax and all these sorts of things. So they're trying to limit your ability to be profitable and make it harder for you to stay in business. What it's doing is it's squeezing business owners into a position where eventually they're going to say, screw it, it's not worth it. And just say, whatever, I'll go get a job and I don't have any stress and I don't have to do any of this bullshit.
When it has to be right, you can trust Lea Technology to help you get the job done and grow your business with their cutting-edge technology. Training employees is challenging and expensive, but Leca's simple to learn, simple to use products allow you to get your workforce up to speed much faster. Trust me when I say Lea Machine Control will help you move more dirt more efficiently. For more information on Lea Geosystems solutions, please visit lea-geosystems.com.
If the government is making it harder for you to prosper as a business owner and they're increasing what it's going to cost you to run your business, they are, in my personal opinion, I think they're intentionally doing it, but they're intentionally or unintentionally trying to squeeze the business owner, the private business owner, to a point where they say, screw it, I'm done. I'm going to go get a job and it's not worth it. But most people don't realize that without private business and people that want to prosper and create jobs and create opportunities, yes, for themselves, but also for a lot of other people, we're going to get in a really bad situation as a country.
Yeah, we're getting there really quick. Okay, that's enough with the operators. Let's talk more about business owners, because there's a bunch that are going to be watching this here too.
When it comes to actual options to invest money as business owners, you're kind of limited. You can't open up RSPs, you can't open up TFSAs as a corporate entity. So you're looking at non-registered accounts, you're looking at real estate, you're looking at insurance policies, you're looking at, depending on what type of corporation, like you could do private lending where you get into that whole realm. What I deal with mostly with business owners is permanent insurance. So I use it as a alternative investing solution for them because permanent insurance is not considered a passive income. Whereas some of your investments, if it's considered passive income, you get taxed at a higher rate on that money that's in there. So what I like about insurance is you can put money in. It gives you insurance which is going to cover your liabilities in business in general, which is nice. But then in there, you can start to grow it. Now you have different ways that you can structure an insurance policy. You could do a whole life policy which earns dividend interest, like a participating whole life policy.
Mm-hmm.
So you're essentially buying shares in an insurance company as being an owner of the whole life policy. So instead of getting market returns, you get a dividend return, which depending on the company, it's traditionally around 6%. Sometimes a little more, sometimes a little less. And that's somewhere where, hey, you're just consistently bang, 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 getting even money. You're not getting a 20% year, but you're also not getting a negative 20% year. Just consistent, steady Eddie. And some business owners really like that. And then the other option around permanent insurance is you look at something like a universal life policy, where a lot of the same tax advantages and strategies work, but the way that the money is invested is it's actually in funds which have market performance. So again, you have years where you're up 20, years where you might be down 20, but over time that fund is going to perform positively. And then you have the ability to leverage that money out of your insurance policy and use it to either pay for things like run business expenses, or you can also do it for business expansion, right? Maybe you want to buy a property, maybe you want to do something with it, which can turn into a really long conversation. But when you leverage money out of an insurance policy, there's two main benefits to it. One, you're not physically pulling the money out of the account. So if you can imagine, if I have $100,000 sitting in a savings account, if I need to go spend 40 grand because I need to buy a new piece of equipment, I need to put a down payment on an office building, something like that, well, I physically take out 40 grand and I'm left with 60,000. And whatever interest is being earned, I'm making interest on 60,000 now. When you leverage against an insurance policy, what they do is they actually loan you money against your policy. So my $100,000 is not physically coming out. I'm still earning interest on that same 100 grand the whole time.
But you're now paying interest on the loan.
Correct. I'm paying interest on the loan. If this money is put towards something with the purpose of earning interest, the purpose is basically in an investment. Could be property, could be business, could be whatever. As long as you can deem that it is for the purpose of earning a return, you can actually deduct the interest you're paying on this loan against your income for the year. So now you can get
So
this
it's a free loan.
So yeah, you can get this money working for you, and you can still have your principal that's growing at the same time. And then depending on how you want to do it, you would pay this loan back to yourself into your insurance policy, or you would never pay it back, and when you die, your insurance policy would pay off whatever was outstanding loaned. If that makes sense. Again, it can get into a big conversation, but that's what I talk about with my clients that are business owners. Like I have a client he runs a couple of different large businesses in the GTA, and he has different things that he does with a couple of different advisors, but he came to me because he wanted an alternate strategy. He wanted to get into insurance. He had some friends that ran businesses that did the same thing, and he's really enjoyed having it as a alternate type of investing within his corporation. The two main types of interest you can earn on your money is simple interest or compound interest. So simple interest is where I am paying interest on the portion that I have lent. So if I lend $1,000 and I'm at 5% simple interest, I'll use $100. Easier math. So if I lend $100 and I've got 5% simple interest, that means I'm paying $5 in interest always, no matter what. Every single month I'm going to pay for what I have lent on. If I pay that 100 down to 50 and it's still 5%, well, now I'm only paying 5% on 50, so now I'm paying $250. Where compound interest is different is your interest that you owe is going to have to be put on top of it. Now, you can have simple interest and compound interest on both debts and investments. But the easiest way to understand is when you have a credit card that is at 18% interest, I lend $100 off my credit card, I get charged $18 in interest. I now owe $118, and I'm going to pay interest on the entire 118.
Which is another 18%.
Yes, which is so now you're paying 18% on
that.
118, not just 100, and then it keeps stacking, it keeps compounding on top of itself. So
That should be illegal.
it should, especially so that video that I said I don't go check it out on my page if you see it, but like I basically am explaining like fractional banking. So you give the bank $100, they're allowed to lend that money up to 10 times. So I give them $100, they go lend out $1,000. So they lend out $100 10 times to 10 different people on lines of credit, credit cards, all this sort of stuff. I have not seen a credit card for less than 18% interest in a long time. So they're making 18% on $1,000. They make $180. I make 1 or 2% on my $100 that's sitting in the high interest savings account. So they pay me $2 if it's 2% interest. They make $180. So they'll cut off $2 and keep $178 in interest that they just made themselves because I gave them $100 in deposits. It is criminal. It is absolutely should be illegal. So the general idea is you want simple interest on your debts when you can, and you want compounding interest on your investments. And we just want to make sure, again, back to that rule of 72, if my investments are earning 2%, that money will double in 36 years. If my credit card is at 18% and I'm not paying it off, that will double in 4 years. We just want to get it going the other way. We want to get people's interests on their investments as high as possible and reduce what we can on their debts.
You're more than just money.
Yeah.
Like, you're a very smart dude.
I appreciate that. And I would say on the finance specific side, because I know that's kind of why we wanted to get this conversation going, is just, yes, understand that talking about money is not a taboo thing, which I think we were taught when we were growing up. It's important to talk about money. Now, there are ways to do it and not to do it. Like, don't be an asshole and try to say, I have all this, I do all this. But having conversations about money allows you to understand, learn, know how to do things differently, and just, money is very fickle. It's like a pretty woman. If you don't pay attention to it, it leaves you. So pay attention to your money, talk about it, be open, and you don't have to tell people everything, but just make it a part of your daily conversation, right? And the more attention you pay to it, the more it will grow, the more it will like you. Outside of finances, I would just say, there's a lot of crazy shit that's going on in this world right now. And I think the more individuals that focus on just being the best possible version of themselves that they can, work really hard, right? Which I know a lot of operators do work really hard, just in general. Work really hard, try to get your money right, try to get your body right, do good for others, be willing to go out of your way to help other people. There's nothing more needed in the world right now than just good people that are going to go be good people to others. A good man helping another person get to where they want to go. If we could start to foster more of that in culture these days, and I don't care who you are, where you come from, what your background is, the more that we can come together and help each other, the better off all of our lives will be.
I agree. Like, I'm trying to use my platform to help other people, operators, whether it's like...
And that was one of my main reasons for being drawn to you, is just like I could tell just before we even really started conversing, was just like you always seemed like you were trying to throw out tips and nuggets and things that could help somebody. And the more collaboration and stuff like this that happens, the more people we're going to be able to help on it.
Yeah, because no one helped me. So I was like, I'll be the bigger person, break the chain, and be the person that helps someone.
Yeah.
Right? So
You can't do something for somebody else without it coming back to you at some point. If you help enough people get to where they want to go, you're also going to get where you want to go.
I used to feel bad about making money. I've since realized, like, I make more money the more I can help people. I can build a bigger platform. I can help teach people things like this.
Absolutely.
Right? So
that I think that goes back to the comments we were making earlier about we've been taught that it's taboo to talk about money, that it's shameful, it's not something that you should talk about or bring up. When in reality, the more all money is a magnifier of the person that you are. Whether you are a good or a bad person, genuinely at heart, you can find a way to make a lot of money if you want to. If you're a really bad person and you find ways to make money, you're probably going to do more bad, if I'm just being honest. You're going to create more destruction and chaos. But if you're a really good person and you know in your heart you're a good person, you should see it as more of a duty, an obligation for you to go and make a lot of money, because you will automatically help more people. And for those that say, oh, well, I donate my time and I donate this. I love that. That's important too. However, me going and serving soup at a kitchen a couple times a week is not going to help as many people as if I can grow a business that allows me to
Pay 10,000 people to go do the same thing.
Or build 5 new kitchens in the community. That's going to serve a lot more people. So there's nothing noble about saying, oh, I don't need money or money's not good. Right? Everybody chooses to give the ways that they can in their own way, but I think we've been taught on purpose to think that making money is bad or it's evil or it's, which a lot of people talk about, like money is the root of all evil, which is not true. It's the love of money that is the root of all evil.
I think I've seen something on that the other day somewhere. I think it was TikTok or something. Someone said something like that, or something similar.
And it's true. Again, money's the tool. Money itself is not good nor bad. It's how you use it. Mm-hmm. And if you start to love it and idolize it and worship it, yes, it's just going to turn bad, because it's going to turn to greed, and it's not going to be, things are not going to go well. But the more good that you can do, the more money you have, the more good that you can do. Mm-hmm. Period. There's nothing noble about I just posted this on my story today. There's nothing noble about not pursuing your highest potential. Your highest potential will allow you to help more people in more ways than you can even currently imagine. You just have to go out and actually put the work in to do it.
These days, a lot of people are struggling due to inflation and stuff like that. Mm-hmm. Do you see it getting better anytime soon, or?
I'm not an economist, but no, I don't. I don't think so. To be honest, it's one of the other problems that we talk about with our clients, because as much as debt is an issue, 10, 15 years ago, I would say debt was an issue because of habits. Majority of the time it was habits. Now it's habits, but it's also cash flow. Debt is becoming an issue because cash flow is becoming such an issue. Most people, if you go and look up, I can't remember exactly what the spot to look it up, but essentially in the last 40 years, our income has gone up in average in Canada by about 40%-ish. The expenses have gone up by about 150%. So unless they're finding ways to make...
So we're doing worse now than before.
Yeah, oh yeah. And things are getting at a rapid pace. It's not slow, especially the last 3-4 years. It's got exponentially worse. That's why you look in North America, we have got the highest rates of consumer debt we've ever had. We've got the highest rates of defaults on consumer rates, on consumer debts. Like it's getting out of hand. One of the biggest things, honestly, I talk to a lot of my clients about is, like, we're going to help where we can, but we're also not magicians. One of the best products I can suggest or offer out there is finding a way to increase your income, whether it's, it could be more hours at work, could be a second job, it could be a side hustle of some kind, like a legitimate opportunity on the side that makes more money for you. Because I'm not sure, I don't think media started out as a money maker for you in the beginning. It was more passion.
Yeah, I don't do a lot of things for money. Mm-hmm. I mean, this sounds kind of brutal, but I don't really care about money. I need money, mm-hmm. but it doesn't drive me.
Right.
Or it hasn't been a driving factor for a long time. Now that I know I can help people, it's now helping me with that driving factor. But I don't know.
Yeah. The reason I was going to ask is because you were telling me you worked your operating job and then you were doing media on the side.
Oh, yes.
Doing extra.
Yeah,
right?
yeah.
And that's where I think most people, and it's unfortunate. I don't want to tell you like, hey, you have to go in and sacrifice your whole life. And not saying you do. If you feel comfortable where you're at and you are more than surviving, just keep doing what you're doing and enjoy life. But if one of these two things, either you are not surviving, like you are going backwards every month, or you're just barely making it, or on the more positive side, if you've got an ambition in you and you've got some drive and you just like feel this kind of restlessness of like, you can do more, if either of those things are true, I would highly, highly encourage you to go find something that you can do on the side with your current job.
I see what you're trying to get at. I kind of lost my train of thought there. Yeah, so I worked a day job construction. I would work 12 hours a day. Then I would get home from work, go on my computer for another 4 or 6 hours and try to build a brand online.
Yep.
And then 14 years later, here I am working what used to be my hobby or my side hustle, my passion.
And it was the same for me. As I said, I was an electrician. I worked 5, sometimes 6 days a week. And then I was usually like 7 to 3, 7 to 4. And then I would get home, take a little break. And then 2 or 3 nights in the evening, I was getting licensed in this industry. I was building clientele. I was learning new skills. I was getting better with people. Like it takes time. It's not going to happen like that. But most people right now, one of the biggest things they can do for their financial situation is earn more money. And it sounds rude to say that because some people, they feel like they're totally tapped out. And hey, the odd person is completely tapped out. But if you're honest with yourself, there are more ways that you can increase your income. You really got to look. You got to talk to more people. Look for something that's a legitimate opportunity to help you do that.
You might have to change your entire career. If you're tapped out, then you may have to look at something else.
And one of the biggest things of that, and we talked a little bit about this at the beginning, is you have to be willing to downgrade your lifestyle to get to where you want to go in life. And I call it it's not solely Alberta, but I call it the Alberta trap. Is a lot of guys will go and they'll go work up north, they'll start making a lot of money. Their living expenses were like this and their income went like this. And then all of a sudden they bought all the things that they wanted so that their living expenses were here now. And now I cannot quit that job even though I hate it or I want to do something else because my living expenses are here and I'm not willing to get rid of that. It's a harsh reality, but it is reality.
My last year as a foreman, I made 170. I went from that to $20,000 I made on my own the next year. Anyway.
Sick.
Thanks very much, man.
That's a wrap.
That's a wrap.